The risk seems to be 10% or more to the downside, but at least 3 to 5 times more that or more over time to the upside. And that's why I've taken and made the bets that I've made.
Now, you mentioned that you look at, you're more bullish right now on gold versus silver because of gold's monetary. Central banks are looking at gold as a monetary metal, it seems like. Now, a lot of people are looking more than just at the quantity they can own for silver, but also looking at the gold-silver ratio being about 90-1 historically high. Your perspective on that, because some people's thesis or some people's idea is that own silver right now until the ratio goes down and then swap into gold. But your perspective, why are you at the moment more bullish on gold?
Well, I would just caution people to this, and I'm not saying that they're not right, but tools that were used for markets 20, 30, 40 years ago may not be as effective or may be outdated because the markets have changed so dramatically. I'll give you just an example, the general equity market. When I entered the business, 90% of the trading was the general public. I doubt 10% is that now. So the gold-silver ratio, I think had more validity years ago, but the markets that make them up and why they move certain ways have changed. And so I don't believe you can keep using that same ratio, so to speak. And there's always been an argument, what is the right ratio and all? And that's always just the opinion of someone looking at it. What I think the mistake would be is to be overweighted dramatically in one versus the other. If you said to me, Pete, if you could have 50-50, would that be happy? Yeah, I'm satisfied with that. If one goes up a little bit more than the other one, fine. I don't think one's going to go up without the other one going. So it's not something like you're going to miss the boat if you emphasize one or versus the other. But the ratio thing, I've kind of put on the back shelf because I just don't think it's as qualified anymore because so many things have changed to make up what should be the so-called right ratio.
And could you expand on some of those things that have changed that really possibly make the ratio irrelevant right now?
Well, first of all, and there's a good argument of how much more is industrial use for one versus the other. How much, look, central banks have been, the secret in all this, and I think if we're correct, for those of us that are bullish on gold, all 3 or 4 of us, because on Wall Street, it's just a natural tendency not to be bullish. It's like kryptonite gold to a lot of the general people on Wall Street. But for those who can be independent and also not just totally caught up and always think you have that, gold's going to go through the roof. I think you have to look at why have central banks, given everything that we know that they've been doing in the paper markets and what they've been doing with interest rates, why have they continued to be significant large buyers of gold, particularly China and Russia? And I think that goes to what my feeling is. Last week, the BRICS met. Not only are they inviting new countries in, including possibly the Saudis, but they publicly spoke. Putin actually made a public statement along with Chinese officials how they're about to start trading away from the dollar without getting specific, but yet you had to be stupid not to think that they were not talking about a different currency, whether they're going to adopt the yen or they're going to introduce a new one. So I think things like that make up a difference on what could happen here. And that's why I think we can't use things from 30 or 40 years ago anymore, including whether you're looking at general equities or bonds as well.
And if we could expand on this move away from the dollar, because it seems like we are definitely seeing that, especially after the Russia-Ukraine war, there has been countries moving away from the US dollar. And as you mentioned, the BRICS nations are looking to develop a new reserve currency. So can you expand on how that is going to impact people in the US? Will it bring dollars back to the US and cause more inflation? Your take.
Well, yeah. Well, first of all, we've seen already the IMF has reported that since 1999, ownership of the US dollar has gone from about 70% to 59%, I think is the number. So we've seen that slow but steady move away from that into the dollar. I think what the war did, it really spooked even allies, not just because of how we left Afghanistan, but that we would suddenly do what we did in terms of banking and freezing and all this other stuff. And it would make countries, many of which aren't exactly our best allies, think, hey, what would stop them from doing that to us? And if they did that to us, what could happen? Should we start thinking about something away from them? And, listen, whether you like it or not, and this is hard for people because they don't like the thought, but China is moving towards, if not there already or surpassing, to rivaling the US as the world economic power and militarily. I mean, it's a fact of life. People don't want to deal with it. So why wouldn't you would want to think, if you didn't have some natural prejudice or tendency to think that maybe something that they're involved with or something that revolves around their selves? Look at today as you and I speak, markets rallied in some of the commodities, especially copper, simply because China spoke of an easing, not the US, China. And so I think that's another factor. And, why have they been such accumulators along with Russia and getting rid of US financial assets, particularly treasury bonds? So there's a stealth bullish factors adding up for gold. And while the general financial media is never going to talk positive about it, they're just not. Their hips are tied to the major brokerage firms and the people who advertise with them. And those folks cannot solicit or be high on gold at the same time telling you to buy stocks and bonds. So I just think this is a market that will catch people by surprise. It's down at a level now where technically and fundamentally the risk seems to be 10% or more to the downside, but at least 3 to 5 times more that or more over time to the upside. And that's why I've taken and made the bets that I've made.